Welcome to my new video, which is about a report of banks where the mortgage lending jumps to the year's highest level. Experts react on the mortgage market's resilience. Net borrowing of the mortgage debt by individuals increased to the $7.5 billion in May from $4.2 billion in April, according to a data which is released. Figures sits well above the 12-month pre-pandemic average up to February 2020 of $4.3 billion. The highest net mortgage borrowing since September last year. It is also up $1 billion on March's peak of $6.4 billion. Gross lending increased to $28.4 billion in May from $26.7 billion in April, while the gross repayments rose slightly to $21.8 billion in May from $21.6 billion in April. What had seemed a dampening of house buyers' appetites in April is clearly only temporary, and demand for the property market is still high despite tough economic times. Doom merchants who predicted the housing market would fall off a cliff when the pandemic hit were badly wrong. Levels of borrowing and house buying have defied expectations and they are now higher than pre-pandemic, although it must raise the question just how much longer can these increases continue. Meanwhile, approvals for the house purchases, an indicator of future borrowing, rose to 66,200 in May from 66,100 in April. That is slightly below the 12-month pre-pandemic average of 66,700. The approvals for remortgaging were unchanged at 78,800 in May. This remains below the 12-month pre-pandemic average up to February 20 of 49,500. This data only includes remortgaging with a different lender. Effective interest rate, the actual interest rate paid on newly drawn mortgages increased by 13 basic points to 1.95% in May, while the rate on the outstanding stock of mortgages ticked up 2 basis points to 2.07%. May was a crazily busy month on the mortgage front, and this data underlines that. The mortgage approvals data also shows that people are still actively borrowing even amid the cost of living crisis. A lot of people want to buy before rates rise even further. People who have been procrastinating are now very proactive. All they read about is rates heading north, and that is driving them to act and act now. It's a trend we expect to continue in the months ahead. Mortgage approvals are generally a good indicator of market direction, and these, like the nationwide figures yesterday, show that leaf remarked. What's happening on the ground is that buyers and sellers are inevitably more cautious, bearing in mind steep rises in the cost of living and interest rates, with probably worse to come. Recent rate hikes and the cost of living crisis are likely to be influencing a more cautious approach by lenders. But approvals for house purchases rose slightly. Conversely, with the recent spike in mortgage maturities and again rising rates, it's no surprise to see mortgages approvals rise. A drop off in approvals may materialize in the months ahead as steam is taken out of the property market by lack of stock, rising inflation, and increasing mortgage rates. Mortgage affordability is starting to be squeezed as the lenders update their figures due to the cost of living crisis. This would allow people to increase their monthly disposable income. He, however, stressed that this is not appropriate for everyone, so borrowers must always talk to a broker about their circumstances and be guided by what they say. Thank you so much. I hope you will like the video and subscribe to my channel. Thank you.